Stock surge with the Nifty at a 52-week high after rising past 25,700 for the first time in 2025. The Bank Nifty too scales to its lifetime levels. FMCG consumer durables lead the charge even as IT drags.
Infosys and Wipro post better than expected Q2 numbers, but muted growth expectations disappoint, particularly Infosys not revising up its guidance despite a strong Q2 show.
Analysts expect Reliance Industries to post a healthy quarter with operating profits growing along with some margin expansion. Growth is expected to be led by the O2C segment, with Geo and retail also chipping in. Some weakness likely in oil and gas.
Gold and silver continue their dream run, scaling new highs. Most analysts now see $5,000 per ounce on the horizon for gold. Silver too is seen scaling to $65 an ounce on a supply crunch.
We're here in our festive finery. You're watching us here on Halftime Report. I'm Mangalam Malu, with me Ekta Batra and Vinny Motiwala. We come to you live from the CNBC-TV18 studios, Motilal Oswal studios. But importantly, what's also in the festive finery right now is the market. We have the Nifty, which is almost 171 points higher, 25,750 as we speak. The Nifty Bank hitting a fresh record high. We have all the colors of the season. And even if you look at the mid-cap index, which is slightly underperforming, we still have an even keel on stocks which are gaining versus the stocks which are losing. So a lot of these consumption names doing extremely well.
Hi guys, yes, absolutely. You know, the celebrations are really trickling in terms of the markets at this point in time. If you look at it, the Nifty 50 on a week-to-date basis also is up around 1 point or almost 2% at this point in time. The mid-cap index is up around 0.8%. We have no complaints considering that the Nifty is at the best levels that we've seen in a year, and the Nifty Bank is at a record high as well. So no complaints coming in. Earnings as of now, the street seems to be rewarding earnings positively. So that's the other piece which seems to be working out for the markets at this point in time. But Vinny.
Hi, afternoon, Mangalam as well as Ekta. But we have an important interaction that is lined up for you all as well. So let's actually go across to Parikshit, who is in conversation with Rajiv Bajaj, Managing Director of Bajaj Auto. Parikshit, over to you.
Well, we had seen in November 2024 how Austrian motorcycle maker KTM had applied for legal restructuring and self-administration because they had encountered financial liquidity constraints and several hurdles. To bail them out and save them, Bajaj Auto, which owns a 49.9% stake in KTM's parent company, they came forward with a €800 million package. The company has already infused over €200 million. They have also secured a €566 million loan to support the rest of the loan that they had committed to KTM. And with this, they will be taking over the KTM brand, subject to an approval from the European Commission. We now believe that that approval is quite imminent. Joining us to discuss the road ahead is the Managing Director of Bajaj Auto, Rajiv Bajaj. Rajiv Bajaj, thank you very much for joining us on the program today. Let me begin by asking you about the timeline for permissions and approvals from the European Commission. What are you expecting?
Thank you, Parikshit. So exactly in line with what you said, as you know, our investment went in on 23rd of May, and a series of approvals was required after that. As we stand, all the approvals that are to come on account of mergers and acquisitions are already in. Those that were to come in terms of foreign investment approvals, I believe, are also through. We are waiting now for the key approval of the Takeover Commission. We understand that this may be forthcoming in November. We hope it will be positive, and which means that in that case, after a almost 18-year association, in which Bajaj has been a minority partner, we would become a 76% shareholder in KTM AG, and well, in PMAG actually, and from being an observer, we would take charge.
What, in your view, led to such a sudden and sharp downfall for the KTM brand? This was a pillar of Bajaj Auto's premiumization strategy. What, according to you, led to such severe financial constraints?
Well, Parikshit, yeah, we were all taken by surprise, I must say. I think most of the industry was quite shocked at how rapidly, this thing developed. And my mind goes back almost 30 years to what my first management guru, Dr. John Wallace, told me, which was simply this, that the single biggest reason for corporate demise is corporate greed. And I have really witnessed this play out at KTM, unfortunately, over the last 12 months in particular. I would say broadly three types of greed. First, operational greed, best exemplified by what happened in the last couple of years when KTM Austria kept producing and overproducing, even though the spike of demand that had come about post-COVID had calmed down. And as we all know, with the result that KTM distributors and dealers worldwide were carrying over a year's worth of inventory, which was just preposterous, frankly speaking. And then there was the, I would call it as a strategic greed. Companies often get into businesses that they have no business getting into. In the case of KTM Austria, the best example of that hurt them the most was getting into the bicycle business, specifically the electric bicycle business. When you have no synergy in any of your major operational areas, such as R&D or supply chain, or marketing, sales, and distribution, with such a business that may appear to be adjacent, but actually has no synergy with your core business, then really, it is irresponsible to venture into that space. This was the, second greed, the strategic greed of getting into a new area that was actually not synergistic. And the two factors combined to take KTM to insolvency in a period of months. Now, I know you might say that, but Bajaj was part of it,
Right.
and I would concede that yes, we were also part of what went wrong. But I would only submit that as a minority partner, we could not prevent this, and I can share with you today that we did our best to resist it. So much so that I think it led eventually to the third kind of greed, which, if I may call it, almost a governance greed, where certain decisions like this were either taken, without our knowledge, without our information, and sometimes without even following due process. So we are quite shocked at what has been revealed to us over the last 12 months. That we have got involved in this process. I must clarify, we are not yet in charge. We don't have takeover permission yet, but as an observer, this is what we have come to understand. And if I might summarize it, leaning on the words of my other management guru, Jack Trout, he would say, the stock market can become the temple of greed. And I think this is what happened here. In the pursuit of valuations, some of these options were pursued that should not have been pursued. And when you link, the stock market price to company performance and company performance to the remuneration of top management, this is how things can go horribly wrong.
And you had warned them about this, would you say?
Well, this is something that has happened over years. So from time to time, whenever we were aware of some of these issues, if I were to enumerate all the minor and major issues, we would be speaking for the next hour or two. We took it up. But, as a minority partner, there was only so much that we could do.
Okay. Now, when we speak about restructuring and management restructuring, are we going to see some changes, some major changes in KTM going forward? Would you begin with management restructuring?
Oh, yes, absolutely. This is a problem that is not caused by 98% or 99% of the KTM employees. This is a problem of the top management of KTM, the erstwhile top management of KTM. And that's why, quite frankly, most of them are gone. What we have now in place is a new team, a wonderful new team that I personally feel very confident about. The entire team is already in place, barring just one vacancy that will be filled in the coming months. And it's a very nice combination, I think, of some of the, if I may call them, our older colleagues who are still, very passionate about KTM, very committed to KTM, in areas like the product planning, in the R&D, in the legal department, etc. And then we have some wonderful, outstanding new colleagues led by our CFO, new CHRO, etc. So we have a great team in place, and I must make mention of the manner in which the Bajaj bench out of it. Yeah.
Absolutely. Now, just to ask you for an update on KTM sales in India, the GST impact on the KTM offtake, what are the exports that you're seeing from India right now, and what will be the US tariff impact according to you?
The short story would be that KTM India sales are growing very well. The domestic sale is up like 70% year on year. It is a combination of, I would say, half the credit goes to the excellent GST reduction move of the government, very well timed. And the other half goes to the introduction of the new products, particularly the new Duke 160, which is really flying off the shelves. So domestic sales of what we make in India is really at an all-time high. I think this month we will finish at the highest ever in our 18-year association. Exports also, I'm happy to say, have normalized. And you asked about the US in particular. And I'm happy to say that we believe US sales will continue uninterrupted in volume terms of the products that we supply out of India. Yes, we are hit by a 50% tariff, but that's the power of the Indian supply chain. Believe it or not, Parikshit, we have absorbed most of that 50% tariff. Some has been passed on to the consumer, a small percentage of that. And despite that, we will be exporting at an EBITDA that is higher than our blended corporate EBITDA. So that's the power of, the cost competitiveness of the Indian supply chain.
Last time we spoke, you had said that the European manufacturing is dead. Any further developments in terms of re-engineering the KTM supply chain, optimizing costs?
With that one interview, Parikshit, I am told you made me famous in all of Europe. I had so many people from the KTM ecosystem telling me that, in that interview, my counterpart, Nick Bloor from Triumph, said he's never received as many forwards of an interview link as he has of that one. And I find it very amusing because it was the erstwhile KTM management that has been presenting to us over the last 10 years, about how European manufacturing is dead, how KTM needs to move more and more production to India. And eventually we did move half the volume to India. They said, European work culture is dead. Wages are too high and working hours are too few. They showed us graphs comparing Europe, China, and India to that effect. Similarly, they said European politics is dead. Energy costs are so high, and as a result, all associated inflation is so high. They brought it to our notice that, Triumph is now made entirely out of India and Thailand. Ducati now has a second plant in Thailand. BMW is moving to Thailand. So, this is what I learned from the previous KTM management. And now, when I echo the same sentiment, I was frankly taken a little aback at the kind of, feelings it seemed to generate on the other side. But yes, I think restructuring the supply chain, moving more things to, lower cost supplies in Europe, outside of Europe, is certainly the way forward.
Right. Mr. Bajaj, also, what is the reduction we're going to see in headcount and also overheads at KTM? Have you set some targets for the company?
Actually, you touched upon what is really low-hanging fruit out there. Again, from the outside, so far, what we observe is that there is an opportunity to reduce the overheads by more than 50%, and the overheads are enormous. And that covers R&D, that covers all marketing areas, including racing. That covers obviously all the operational areas, some of which we just touched upon. And of course, if I may call it, the general administration, including IT. So over a 50% reduction, which is a lot of money. In terms of headcount, the erstwhile and the kind of current management that's been there in place since last November has already brought it down from 6,000 to 4,000 people, which in their own estimate is still too much. But what I find in a way amusing again is that in this 4,000, only about 1,000 people are blue collar. 3,000 people are actually white collar. And that's really perplexing because it's actually the blue collar that make the motorcycles. And in that sense, if some more of the volume is moved out from Mattighofen to wherever it makes more sense, whether India or otherwise, the impact actually on the blue collar is going to be relatively benign. The issue is going to be with the white collar headcount, which is very, very expensive, as you know, and it brings back to me Mark Zuckerberg's words when he said, the problem is that we have managers managing managers, managing managers, managing managers, managing managers who manage the people who do the work. So I'm amazed at the kind of overhead, the management overhead of bureaucracy that we found in this otherwise excellent organization.
Okay, that is an interesting chat there. Thank you so much, Parikshit, as well as Mr. Bajaj, for joining us for this conversation. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere. After the break, we'll be joined by the management of Indian banks. Stay tuned in for that conversation.
Welcome back. Well, for the markets, it's holding steady. We have the Nifty, which is 180 points higher. We have the mid-cap index, which is a little pressured. It's down around 56 odd points. But let's get talking about one particular bank which has reported numbers. Indian Bank is the next management on the show. It reported what was a good set of Q2 numbers. We have with us Mr. Binod Kumar, the MD and the CEO of Indian Bank, who's joining in now. Mr. Kumar, thank you very much for taking the time out, and season's greetings as well. Let's start by talking about the loan book, which was in fact better than what the street had at least anticipated or factored in. You've done around 12% plus. Just give us a sense in terms of, where exactly did you see growth come through in terms of advances and your guidance for the remaining part of the fiscal as well.
Yeah, thank you for having me here, and season's greeting to all of you. Loan growth has been better than whatever we have expected. We have given guidance of 12%, but it is 12.65%. Main driver of the credit is RAM. RAM sector, if you see, my growth in retail is 18.58%, whereas in agriculture it is around 14%, and MSME also around 14%. Even corporate book, which grew last quarter 1%, it has grew by 5%. So major driver is the RAM. And we are also seeing some green shoot in the corporate book, in particular in few of the sectors like green finance, data warehousing, smart metering. Some road projects are also coming, and coming quarter or maybe coming half year, I am seeing good traction for the ports also.
So what does that mean in terms of the remainder of this year and their advances growth? If you could give us a sense on that. And also, as the RBI has cut rates, the street expects maybe a cut more maybe going forward. What are your projections on NIMs for the second half of this year?
Yeah, so guidance, I have given guidance of 10 to 12%, and I stick to that. We may do little better than that.
Got it.
12%. Yeah, and on NIM, assuming there is a no rate cut, then I think if you see this quarter, my NIM has only 1 basis point contraction was there. So similar 1 or 2 basis point contraction I'm seeing in the next quarter, and thereafter it should start going up if there is no rate cut. But if there is a rate cut, which is the environment for which is benign, if you see the CPI, etc., is good. But only thing, growth numbers are also good. So timing will have to see when rate cut comes. But when rate cut comes, there will be some further contraction on the NIM.
Okay, you're saying there will be some further contraction if there is a rate cut. So what's the percent of your repo linked booked, if you could help us with that as well? And what would be the impact if there's a 25 basis point cut? Then what would be the impact in terms of your NIMs?
Yeah. So my 48% of the loan book is linked to external benchmark, repo rate. Going forward, I can see if a 25 basis rate cut is there, then impact on NIM maybe by 5 to 7 basis point. Because some MCLR book will again reprice in Q3, so impact of that will also come.
Okay, well, some positive news which has come in for NATCO, where the Supreme Court has in fact dismissed the plea which was filed by Roche with regards to a spinal atrophy drug that NATCO had launched and Roche had challenged. So that means that it's a positive for patients which has come through, where patients will be able to access the drug at around 16,000 odd rupees as compared to Roche's, which was up to around 5 to 6 odd lakhs. So it's a big relief which has come in for patients. So, you know, Mr. Kumar, just coming back to the numbers, your slippages, you seem to have done better in terms of your asset quality this time round as compared to what you have done, say, same time last year and even same time or even in the previous quarter. So give us a sense in terms of the slippages. You did around 1,132 odd crores this quarter. Is that the trajectory that we can expect for the coming quarters as well? What do you expect to end the year with?
Yeah, if you see my H1 last year, Q2 last year was 1.06%. This year it is 0.79. Sequentially also it has come down from 0.94 to 0.79. And going forward, this trajectory will be maintained because we have used some, using AI, agentic AI also we are using for the slippage. So account as and when it slips to say SMA 0 itself, even SMA 0 we have bifurcated into 2 categories, 0 to 14 days and 15 to 30 days. So we are making concerted efforts on that. That's why I expect trajectory to be continued.
All right. So you expect the asset quality improvement trajectory to continue, 10 to 12% loan growth, which you believe has chance of hitting the upper level of that guidance. And at the same time, you don't see a big change in your NIMs. Even if there is a rate cut, it will be about 5 to 7 basis points in terms of an impact. Final question then, in terms of capital raising, what's the kind of CRAR that you're at right now? And do you have any plans to raise capital in the very near future?
We are well capitalized, 17.31. And profit of Q1, Q2 is not added back when we are taking calculation of the CRR, because that will be added at the end of the year. So I don't see any need for the capital raise, but we have board approval of QIP of 5,000 crore. So if we see some good opportunity, then we may go for QIP. But as of now, there is no plan.
And you aren't seeing any opportunity for acquisitions as well right now. There's nothing on the table, right?
No, nothing. There's nothing on the table right now.
All right. Take that point. Thanks a lot, Mr. Kumar, for joining in and giving us a very stable, stellar outlook for the remainder of this year. And you have a fair amount of capital, also a provision to raise 5,000 crores if you were to go ahead and look at any opportunity out there. Wish you good luck for the remainder of this year. And once again, festive greetings. Take a short break, come back on the other side, more on the markets and stock-specific action. In fact, we'll tell you what the street is expecting from Reliance Retail.
Welcome back. Well, big boy Reliance Industries will be reporting its Q2 earnings today. Mangalam is here with the key expectations from Reliance Retail this time. Mangalam, over to you.
Reliance Retail has been the growth driver and the valuation driver for Reliance for a while now. And given the early onset of the festive season and the updates that we have from other retail players as well, it is likely to be a steady quarter. The analysts expect a 13 to 15% sort of revenue growth range. And because of operating leverage and a lot of the company's own specific movements, we expect an EBITDA growth in line with revenue growth, if not a step ahead, which means the margins would be stable as well. A CNBC-TV18 poll throws up nearly $10 billion in terms of sales, a quarterly sales for Reliance, 13% growth, 86,250 crores. The EBITDA grows by about 15% at around 6,750 crores as well. What this means is that the margins stay in the range that they have been over the last 3-4 quarters, between 7.5% to 7.8%, and 7.8% is what we're expecting this time around. What is it that will lead growth? Remember, the company has been scaling up a lot of their categories, including the likes of beauty, fashion, value fashion, etc. Higher penetration of quick commerce and grocery business will also lead growth for them. And alongside that, their digital penetration. In fact, operationally, they've completed the recalibration of their store network. So the current stores which are there are a lot more profitable than their overall universe right now. So that would help the margins. And Reliance Consumer Brands, which is the FMCG vertical of Reliance, did almost 11,500 crores of revenue in the previous financial year. One of the fastest growing FMCG companies in the country right now is likely to lead growth as well. So all these factors will make Reliance Retail a steady performer this year.
Okay, thank you so much for that, Mangalam. Important to keep an eye out on specifically Reliance Retail numbers as well. Thanks for that. But on that note, we're going to slip into a very short break. On the other side, Manisha Gupta will be in conversation with Anand of Tata Asset Management. Stay tuned in for that.
Welcome back, and joining us is Anand Vardaraja of Tata Asset Management. Thank you so much, Anand, for joining in. Very, very happy festivities to you. That time of the year when everybody is buying gold in whatever way they can, but the gold prices are trading at an all-time highs. Anand, I have to start by asking you on what is your sense with the gold prices? How are you reading this rise?
I think you'll have to step back a bit, Manisha, and see what's really happening in the last couple of years. I think ever since this Ukraine-Russia war started, if you were to look at central banks, especially Chinese central banks, they held a lot of their reserves in US treasuries, approximately about $1.3 trillion way back in March 22. That number today stands at half of that 1.3, so roughly $650 billion. And if you were to look at the Chinese central bank, they've been steadily increasing their gold reserves. I think the last quarter or so, their reserves have gone up from 5-6% to about 7-8%, which just for context, if I were to give you some numbers, India holds roughly about 13-14% of our reserves in gold. Germany holds roughly 78% of their reserves in gold. And China, like I mentioned, is 8% in gold. So you can imagine that, this is something which perhaps could play out in a manner where gold could continue to kind of keep looking solid over the next, medium to long term.
Anand, the people have started treating gold now as an asset class, also as a financial instrument, and that is where exactly the ETFs come in. And we've seen very, very strong buying happen in the month of September. I know it's too early to ask, but is October going the same way?
Yeah, just for context, I think if you were to look at August numbers in ETF, gold ETF alone saw about 2,300 crores of net flows. That number in September stands at 8,300 crores. We've seen a 4x jump, Manisha. And I think if you were to look at what's really happening is you are seeing physical gold prices shooting up. That is perhaps increasing a lot of interest in the asset class, and there is demand for paper gold as well, which is coming into ETFs. ETFs by nature will then have to back it with physical gold. So again, they went and bought more of physical gold. And it's a bit of a circular thing which keeps happening, each trying to catch each other's tail. So which is why I think the interest levels are so high as far as gold is concerned.
Anand, how many new participants would you say have joined in when it comes to ETFs?
I think the number remains more or less the same. I think it's just the retail interest in gold, especially precious metals as a category. We've seen the volumes going up. We've seen a 4x kind of a jump month on month in gold and silver, which is quite heartening.
Anand, how are you reading into also the ticket size here? Because we understand retail would do SIP and they have a measured one. Have you seen big lump sums come into the space too?
Yeah, I think we are seeing all types. SIPs are also strong, and so are lump sum investments. There is a bit of a FOMO which we are seeing in parts. As a matter of abundant caution, we chose to hence restrict flows into our silver ETF because there were supply side challenges that we were seeing in as far as silver was concerned. Especially on the FOF side, we thought, it'll be prudent and in the interest of our investors to then limit or restrict flows there.
Anand, that's exactly what I was coming to next, because silver ETFs have seen a shutdown, not just from Tata, but various other funds as well. If I can count it right, maybe 3 or 4 in total as of now are not offering it. We've seen huge premiums. I mean, anywhere between 5,000 to at its peak at 25,000 rupees per kg as well. So that perhaps counts for around 16-17%. Is that getting better? Because yesterday was perhaps the first of the days in many that we did see premiums come off a bit.
Yeah, some semblance of cooling off yesterday, you're right. But we'll have to wait and watch because physical, silver supply has to keep pace with the rising demand. I think, like Manisha, this is really peak season for precious metals as we get closer to Diwali, and this demand could further accentuate as it progresses. So one has to really see whether physical supplies really start keeping pace, and whether this premium that you spoke about, whether that is narrowing or not. That's really a function. We really believe that this is a temporary dislocation that we are seeing, and hopefully as time progresses, this should get normalized.
So Anand, you're saying that you'll want to watch some more time before you can bring the ETF buying back yet again.
Yes, that's right.
All right. Anand, as always, thank you so much for joining in and making sense of how India is buying into its ETFs, whether it's gold and silver. Very, very strong numbers. And of course, some action that we saw come in for silver ETFs as well, where new, bigger investments are discontinued at this point in time. And as Anand tells us, we'll want to look at for some more time before we restart there. Thank you so much for your time. And with that, it's a short break. When we come back, we'll talk about markets and stock specifics on the other side.
Welcome back to Halftime Report on CNBC-TV18. Now let's talk about Signature Global. They came out with their Q2 FY26 operational update. Pre-sales down 28% on a year-on-year basis. Quarter-on-quarter basis also seeing a decline of almost 24%. Collections, that has just come in at around 2% increase on a year-on-year basis. But let's move on and bring on the management now. We do have the management of the company, Rajat Khaturiya, who is the CEO at Signature Global, to talk to us about the Q2 update. Rajat, good afternoon. Thank you so much for joining in with us on the show. Let's start by talking about this decline that we're seeing in terms of pre-sales. Collections have been quite muted as well in Q2 FY26. One, what has led to this decline? And now for the rest of FY26, what could we be expecting from the company?
During the first 2 quarters, we've done sales in excess of 4,600 odd crores. So last year we achieved in a little more than 10,000 crores. It was about 10,300 odd crores of pre-sales, which we did. So in the first 2 quarters itself, we've done more than 4,600 odd crores of pre-sales. So by and large, I would say the demand is holding up. During this first half, we've done just one larger launch within the region, which was of about 2 odd million square foot, adding up to about 4,000 odd crores of sale potential. Whereas in the later half of the year, which is Q3 and Q4 put together, we are launching almost 7.5 million square foot, which has a GDV potential of about 14,000 odd crores. So with these sort of launches coming in, we feel that we'll end up doing a fairly good number for this particular year in terms of pre-sales. And as far as collections are concerned, yes, I think we are staying in that roundabout 1,000 odd crore sort of quarterly mark. But this will go up as we move forward.
Second half of this year, do you believe that you can cross that 10,300 crore mark that you did in terms of pre-sales last year? In the sense that for the full year, would you cross that? And if yes, by how much? And even on collections, you've done about almost 1,900 crores in the first half. Last year, you did about 4,400 crores. Do you have a target, a number in mind?
No, we stay committed to our guidance. For the year, we've given a 20% increase in pre-sales as a guidance number. So about 12,500 odd crores of pre-sales is what we're targeting, and we are fairly confident of achieving that number. The new launches which we are doing has a GDV potential of almost close to 14 odd thousand crores. So we are confident with that 12,500 thousand crores of pre-sales to be achieved during the year. And collections are expected to climb in Q3 and Q4 significantly.
Do you have a target for that, for the full year?
6,000 crores.
6,000 crores.
Okay. Rajat, you're sounding extremely bullish in terms of the figures that you have. But just wanted to understand that are there any kind of gyrations when it comes to, say, demand or pricing at this point in time? And if you could give us a sense in terms of what the on-ground impact is possibly with regards to, this uncertainty on the US-India front, and are there any ramifications on the business at all?
So see, Gurgaon, if you understand, it's quite a diversified, micro market. There's a lot of auto ancillary related entities which operate. There are a lot of MNCs which operate, and there's a lot of strong rubber from the Delhi market because, Gurgaon provides a very strong sort of, social ecosystem, and hence we continue to see a lot of migration happening from Delhi to Gurgaon. So courtesy these factors, it's not that, there's some huge impact of these US-India sort of, trade.
Not only that, just a general sense in terms of how demand and pricing is panning out at this point in time. Is it as robust as, say, what it was maybe a year ago?
See, a year ago was a very euphoric situation. The prices were going up like anything. There was no control and there was no idea. Even we failed to understand why prices really spiked during that phase. But honestly, prices continue to go up even as of today. So while the price rise has moderated, prices are still continuing to go up just because demand is holding up. And that's why, we are continuing to achieve such kind of sales numbers.
Okay.
So we stay positive, on the demand.
Sure. Rajat, also, are you seeing any issues in terms of delay, in terms of launches that we're seeing this time, or what is the scenario there? And luxury market, how is that doing for the company?
So see, we are doing this mid-market housing only. It's a fairly wide spectrum, houses may start at, let's say, 1.5, 2 crores, but may go up to 3.5 crores. So we focus on this mid-income housing market. In Gurgaon per se, you don't find it being sold for, let's say, sub 1 crore, that kind of, viability doesn't exist for any housing product given the land prices. So we are in this, average 2 to 3 crore sort of, price points. And at these levels, there are abundant end users which are there because there are quite a few players who continue to do, fairly expensive products or, target the luxury market. So, since we are doing mid-income housing and we are continuing to supply products on a sustained basis, we are seeing good demand.
All right. And just a final question. You're on track for becoming debt-free by FY27, right?
Absolutely.
All right. Take that point. Wish you and your team a very happy...
Debt-free? Yeah.
Sorry.
Wish you.
All right, take that point. Thank you, Rajat. Always a pleasure speaking with you. We'll speak to you post your second quarter numbers as well, and thereafter get a better inkling on how demand is. With that, we'll take a short break, come back on the other side. We track markets and a lot more individual stocks that are moving around. Stay with us.
Welcome back. Well, 25,689. So we're just about hovering at those one-year highs currently for the Nifty, and the Bank Nifty also doing fantastically well at this point in time. Just want to point out that it's going to be a big day in terms of bank earnings tomorrow. So just watch out for that. We have ICICI Bank, IndusInd Bank, HDFC Bank, Federal, all of them that will be releasing their numbers tomorrow. So Monday will be important in terms of what the cues would be for the Bank Nifty. Ahead of that, the Bank Nifty is going in strong into this big event on the weekend. But on that note, we also need to wrap up on the show. Business Lunch coming up next. Stay tuned.